Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. So today we're screening for the difference between your best and worst stocks. I don't know. Kevin Matras, our top stock screener here at Zacks and Zacks.com, does this for us. What is the difference between your best and your worst stocks? Maybe not yours personally, but...
You know, the difference between somebody's best stocks and worst stocks is really pretty simple. If somebody were to ask you what your best stocks were, your answer would likely be the stocks going up or the stocks making new 52-week highs.
Yeah, returning the most.
Right.
Yeah.
Your worst stocks would likely be the ones going lower.
Okay.
That's it. That's the difference. Your best stocks are the ones moving up. It's very simple. It's very powerful, but for some reason, you know, people overlook this fact or they convince themselves differently. Well,
I mean, it was like right in front of me, and I tried to read into it.
Right.
You know, so I imagine a lot of people do that. It's because if you come up with it, there has to be some, you know, something to it.
It must be brilliant.
That's right.
Now, you know, it's funny. For some reason, people have a hard time buying stocks that are making new highs, and I'm not really sure why. I mean, if you think about it, what's the difference between being in a stock while it's making a new 52-week high or getting into a stock after it's already made a 52-week high? There really isn't much different. At that particular point in time, there is no difference. I think some people may believe that it's potentially safer because if they're in it while the stock is making a new 52-week high, they now have a cushion of profit in their account. But just because you have a little bit of profit in your account, that's no guarantee that it won't go lower. You know, I think that if you're in a stock making a new 52-week high, you're very excited. You're looking forward to the next trading day, and this is something that everybody, you know, dreams about. Right. So why not get excited about buying a stock making a new 52-week high? I think the reason is that people think that maybe they missed it. They missed the boat or something. Or they're waiting for the stock to go down. But I'll tell you, while they're waiting for this stock to go down, there's just as many people who are in it who are excited to see the stock go up and hoping it never looks back. So I would say that you should think differently. Statistics have shown that stocks making new 52-week highs typically make even higher highs. And if they are making higher highs, that stock is going up for a reason. And just because you didn't know about it sooner doesn't make it any less attractive.
All right, so how does one go about finding these kinds of stocks?
Well, one of the easiest ways to go about finding these kinds of stocks, it's actually pretty easy, but on Zacks.com we have a free screener, and you can go in there and you can create your own screen, or you can use one of our predefined screens that already has these parameters set up, and you can tweak it and modify it however you wish. With the Research Wizard, which is what I like to use all the time, you can take your screening to a whole new level. You can add different ideas, hundreds of different criteria, and of course you have access to the Zacks rank.
Right. So there's a screen somewhere in here. There are parameters that actually go with this?
Yeah, it's pretty easy, but let me go through it.
All right.
The first item in this screen is I'm looking for companies where the current price divided by the 52-week high is greater than or equals to 0.90. And what that means is I'm looking for stocks trading within 10% of their 52-week high. The next ones is I'm looking for price greater than or equals to $5. I just personally don't like buying stocks that are too cheap in price, probably cheap for a reason. I want to make sure that there is enough trading volume, so the average 20-day trading volume has to be greater than or equals to 100,000 shares.
Okay.
And I round it off by looking for companies with a Zacks rank of less than or equals to 3, which means I'm only looking for strong buys, or even holds. Only those kinds of stocks can get through.
And what stock do you want a profile that came through this screen?
Well, one of the stocks that came through the screen this week is a company called Granite Construction, ticker symbol GVA. They are a diversified civil contractor and construction materials producer with a concentration on infrastructure projects. They have a Zacks rank of a 3. They posted a 38% positive EPS surprise their last time out. But more importantly, they've been moving higher, and they're trading within 9% of their 52-week high. If you take a look at a chart here, you can see that they are basing near their recent 52-week high, and that's a very good sign. So the stock looks very good.
And do you own that stock?
No, I don't.
All right. perfect example that it doesn't have to always be intricate in order to be profitable.
That's right.
As far as screens are concerned.
Very true.
All right, and Kevin achieves all of his screens with the powerful Research Wizard tool that we have available for you at Zacks.com. Now, if you want to see more about the Research Wizard, you go to Zacks.com/Research Wizard. If you want to read the text version of this piece, maybe look into the archive of screens of the week and see some others in there as well. You go to Zacks.com and you scroll down until you see Kevin's picture. It's an old one. We have to update it. But the headline is right next to it, and it'll take you right to that page. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.